The economy showed worrying signs as retail inflation picked up in June and industrial growth slumped in May, increasing the possibility of a rate hike by the Monetary Policy Committee next month. Poonam Sahni joins in with more details of the IIP and CPI. Poonam, take it away.
Certainly disappointed, but on the CPI front, a bit of a good news and a bit of a bad news. I would say that CPI coming in at a 5-month low is far better than the expectation that CPI was likely to come in at a 2-year high. But if you look at this core CPI data, it is at a multi-month high coming in at 6.4%. In fact, the food inflation has been slightly lower than expected. We're also seeing the fuel, housing as well as clothing, footwear inflation, of course, did inch up during this entire month. A part of it is also on account of the base effect, but yes, RBI would certainly be watching the overall CPI and especially the core CPI trends, given that there are further risks on account of MSPs, which may inch up the CPI by anywhere between 50 to 100 bips according to various estimates. Oil price rise, and of course we need to be watchful of the monsoon going ahead. Having said that, if you look at the IIP data, of course IIP data did disappoint this month. Part of it again is on account of base effect, and also May remains slightly a seasonally weaker month in terms of the IIP. We did see manufacturing, capital goods as well as the infrastructure sector output moderate during this month, but the consumer durables output has been remaining fairly strong, thus denoting that the consumer, or the consumption rather, is remaining fairly strong in the economy. But of course we will still watch out for how the IIP shapes up post July, because the adverse base effect would then wane off. But on the CPI front, I guess RBI would be watchful. Would RBI hike rates in the next policy rate? It's now difficult to say, but definitely there are cases for more rate hikes going ahead.